everybody, I'm Christopher Green. You're tuning into AMTV Alternative Media Television. It is Tuesday, July 28, 2015, and the whore bag that makes up Janet Yellen is meeting today and tomorrow, Tuesday and Wednesday. Now, Chris, what makes her a whore? You see, I've got more respect for the women that dance on tables or around polls because at least they're working honestly for a living. They don't print money out of thin air. They don't play these shenanigans, these money games, courtesy of the Federal Reserve. But the Fed is meeting over the next 2 days to discuss whether or not they're going to raise interest rates, whether or not there will be a 25 bip move or a 50 bip move. And of course, this is all playing into the commodities markets, of which have been crushed in recent months. It hasn't been a rout. Basically, commodities have been murdered. Oil has been whacked. Wheat has been killed. Corn has been destroyed. And it's absolutely amazing how this is playing right into the hands of the agenda that makes up the Saudis, that makes up really the New World Order. In fact, there was, what was his name? The billionaire Al-Weed, if I'm saying his name correctly. I just call him Weed. Al-Weed or whatever his name is. He's going to leave billions of dollars like Buffett does after he dies. He's going to give it to charity or something like that. Said, we will never see $100 a barrel of oil again, which I thought was a pretty brazen comment to make a couple of months ago. You know, I can't help but call bullshit on all this. Again, not a single prognosticator told us that oil was going to collapse from its $100 plus level up until now. And now the hedge funds are on it. They're short selling this stuff, just like we saw with the big banks in 2008 and 2009. Some of these companies, if you look at the drillers, for example, I'll pick one company, Chesapeake, a natural gas company, is trading less than half of its book value, around $8.50 a share. I mean, if a company, if it just sold all of its assets today and sold it at auction, you would double your money. The company is at least worth $15 to $20 a share, selling at $8.50 today because of the shenanigans that makes up Wall Street. And what the prognosticators in the media are telling us is a strong dollar. Got a question about this yesterday. Christopher, why is the dollar strengthening? Well, it's strengthening on the hope that they're going to raise interest rates a measly 25 to 50 basis points, even though that is nowhere near normalizing rates. That's not a normal interest rate environment. They would have to move a few full percentage points to normalize interest rates. Again, all of this, all it's doing is creating giant bubbles. And the hedge funds, in the meantime, I wrote about this on Friday. In fact, tune into Facebook. Visit us on Facebook every Friday. I'm doing a little market recap. We've had the hedge funds basically long big tech. We've seen this with Netflix earnings beats. We've seen this with Amazon earnings beats, both up over 10% in after hours last week. In short commodities, it's been long big tech in short commodities. At some point, there's going to be a reversion. Either oil and commodities has to rally back, it has to revert back to the mean. I think fair value for oil, in my opinion, in this current market environment is anywhere from $65 to $75 a barrel, something in that ballpark, or the market where it's valued today, based on future cash flows, has to collapse. So either the S&P 500 and the Dow Jones and the leadership that makes up Wall Street today is going to collapse to the murdered prices that make up the commodity market today, or oil and commodities in general are going to rally to their mean. Something's going to happen. Either way, I think that long-term investments in the oil patch and natural gas, with the drillers, you could look at integrateds like ExxonMobil, for example. Long-term, in either case scenario, I think is a good bet. So when I look at the broad market picture, I see a market that is yet to normalize interest rates and will not normalize interest rates in the future, in my opinion. Ben Bernanke has mentioned this behind closed doors, says we will never normalize interest rates in his lifetime. Based on that environment, based on the environment of bubbles, of course, we've seen this in China with an 8.5% downside move yesterday, something we haven't seen since 2007. I expect, again, a liquidity rush, which is what we've had to artificially support prices until there's some kind of an event, there's some type of collapse, there's some type of black swan, bankruptcies declared, like what we saw with Lehman Brothers and Bear Stearns before the entire financial system and the wheels basically flew off. And in addition to that, I continue to see a devaluation of our currency here in the United States. Yes, we might be having a short-term rally in the dollar because it's the cleanest of the dirty shirts in the laundry basket, people like Bill Gross have referenced before, but that is not a long-term sustainable trajectory for a currency that's being printed out of thin air. This is also why, in addition to oil and commodities being, I think, very good picks long-term, the precious metals market is also a top pick. Both gold and silver, again, I've talked about this for years now, providing a hedge to all the things we've talked about over the past several years. It's a hedge against financial collapse, it's a hedge against inflation, it's a hedge against these market moves, these unpredictable moves that we've seen. And what people need to understand is that this is uncharted territory. This is unlike anything we've ever seen before in economics, in macroeconomics, and geopolitical relationships with, the Saudis. They're telling us, at least through the mouthpiece that makes it the mainstream media, intentionally creating oversupply to the oil market, for example, to basically bleed the drillers dry here in the United States of America. These negotiating tactics being used by the current incumbent President of the United States, Barack Obama, striking nuke deals with what they propagandized to us for years, over a decade, was our arch enemy in the name of Iran. The Ayatollah sending out a tweet pic last week showing and depicting what looked to be and appeared to be the president with a gun to his head. I mean, I read a poll this morning, a CNN ORC poll, I believe it was. It said an overwhelming majority of Americans actually want Congress to vote against this recent nuke deal. Yet Obama is still aiming to jam this down everybody's throat. So again, all of the macroeconomics that we're talking about here, this financial perspective, plays directly into geopolitics. It plays into the new Cold War with Russia. It plays into the Middle East and this new boogeyman created by the CIA called ISIS. It plays into Ukraine. It plays into Saudi Arabia, a country that was once our ally that now we're pissing off, that we're not only drilling here feverishly in the United States of America, but doing business with their enemies overseas. All of this reaching a boiling point. All of this reaching a cataclysm. And it's exactly why the Federal Reserve, the whore bag that makes up Janet Yellen, isn't raising interest rates. It's why they tell us they're going to raise interest rates, but they will never truly intentionally normalize interest rates. At some point, the free market's going to take over. It's going to demand that there's that equilibrium. It's exactly what we've seen in Europe with yields skyrocketing in recent years with the crisis in the pigs nations. What we've recently seen with Greece is just the kick the can down the road strategy, and it all ends badly. The question that you need to ask, we all need to ask, is how long can this continue? In the short run, I think it continues a little bit longer until at least there's the outbreak of war or there's that next systemic event. But I actually think the market's kind of giving us a head fake right now. I think we actually rally into the end of the year. I think personally, if I had to place my bet, I think that commodities will actually revert to the mean. Oil will eventually revert to its $65 to $75 a barrel fair value range. We might get a little bit of a sell-off in the market. But I actually think things get a little stronger before the inevitable, before the event, before that geopolitical movement emerges, before there is that next black swan event. We're seeing this in tech with the leadership. We're seeing this again with the hedge funds, long big tech and short commodities. At some point, like a rubber band that's been wound very, very tightly, it's going to break. I'm Christopher Green. Get this video out everywhere, make it viral, hard-hitting it in your face, and click the link below to support our sponsor. I'm asked all the time what I do to protect my investments. What are the strategies I implement to combat against all the things I talk about on a daily basis, and over 2,000 plus videos in circulation at AMTV? The economy, 0% interest rates, this artificial manipulation at the Federal Reserve, the bailouts, the consequences of all the stimulus and artificial manipulation. What kind of strategy do I have in place for my family? What am I doing to protect our future? Well, one of the things I do is I invest in precious metals. I take 10% of everything I earn and I buy gold and I buy silver. And the company I trust that I do business with is Goldline. These are things you should already be doing, but if you're not, you need to pick up the phone right now. You need to click that link below. Visit Goldline. Download a free investor kit. Tell them Christopher Green of AMTV sent you. Act now. Get your family's financial future in order today.